All right, welcome back, everybody, to the weekly rebalance. We've got some big news coming today for Nick Cargill. Nick officially passed level 3 of the CFA exam. Congrats, Nick.
Thanks. Yeah, very excited.
Yeah, very, very exciting. So, yeah, how do you feel? Do you feel different?
Not too different. I mean, I guess I don't have to study for that particular designation.
Yep.
It's it's nice to have that time back, at least, certainly for at least some time. And then yeah, filled out the application today, so hopefully soon we'll be done with the whole process, but we'll see.
Yep. Awesome. Well, congrats, Nick. And
Thanks.
we've got some exciting stuff to talk about today as well. We're going to dive into the IPO markets because we've got some crazy IPOs coming up with OpenAI, SpaceX, Anthropic, a bunch of different stuff coming up there. But before that, let's talk about markets really quickly and discuss some more volatility on the horizon here.
Yep.
That seems to be the story nowadays. Um, let's what are your thoughts on that, Nick? I'll pull while you kind of give me your thoughts. I'll pull up Bloomberg on the screen. We can kind of look at some of the numbers.
Yeah. No, I mean, volatility is the best way to describe it. I think, coming off of the weekend, it was interesting to watch the Open yesterday, particularly, just because we've got a lot of interesting news about Iran, escalating comments from Trump. Seemed like maybe there's potential for a deal to be made before Tuesday. Now, it's Tuesday and we're getting close to the 8 p.m. deadline, I think is when it is. And looks like there's not going to be an agreement unless something really changes here. So obviously adding to the volatility, but we were coming off a really good jobs report on Friday, better than expected jobs report. And we had a bit of a positive day yesterday. So, that nice little relief there. But the big thing that's still out there is what's going on in Iran.
Yeah, absolutely. Certainly is elevating all the volatility. Just looking here at the VIX, we look at a year-to-date number. I mean, you can see it's steadily climbed. The VIX number has steadily climbed throughout the year. And, not surprising with the comments and the uncertainty there. The S&P is now down 4%, 4.16% for the year. The Dow down 3.3, the Nasdaq down 5.8. And from its peak in January, we're still not quite down to where we were at the bottom on, I think it was March 27th for
Yep.
this drawdown here, but down a good amount still in most markets, both internationally and domestically. So not something that's likely to change, meaning the volatility. That's not likely to change until we get a more steady path on this war in Iran. So I think buckle your seatbelts until that is over and expect swings in both directions. Like
Yeah.
we like we talked about, like you mentioned, we had some swings. We had some good news on other fronts, like in the jobs market last week. Um, that's great. And we actually had a great week last week overall. The
Yeah.
Nasdaq, the S&P, the Dow, all positive. But you know, um, it's going to go both directions until we get a little bit more certainty there. Stock markets do not like uncertainty.
Nope. Nope. And especially with events like these, with a geopolitical event like we have going on in Iran, other potential implications as well. It's very difficult to forecast those things. Uh, so until we get answers on that or more certainty there, it's just going to be one of those markets where we're whipsawing back and forth with a good amount of volatility.
Yeah, absolutely. That's what's gonna happen. So that still remains the elephant in the room, the conflict in Iran. So we'll see what happens there. We're going into our is this week 6? So I
Yeah.
think we're coming up on week 6. So
Yep.
we'll we'll see what happens. Like you said, a lot happening tonight with the deadline. Lots of uncertainty there, but we'll see what happens.
Certainly.
Might be our topic of conversation in the market update for some time to come.
Yeah, yeah, it seems like we keep on talking about it, but
Yeah,
that is the big thing weighing on markets right now.
yeah, absolutely. Well, that being said, wanted to discuss the other, there's some pretty good coverage on IPOs coming up in 2026 here. That's certainly some swinging into focus, some really, really big names. So just as a summary, let's go through some of these. So we've got for 2026, OpenAI, obviously huge name set associated with ChatGPT, SpaceX, Databricks, Anthropic, Plaid, Kraken, all huge, huge names. Cerebras Systems, another one that I found that's a little bit smaller, but they're this AI chip maker claiming that they're making faster chips than NVIDIA. So we'll see about that. But
Yeah.
the point is lots of, especially these mega deals like SpaceX and OpenAI, those are huge, huge names. OpenAI's target valuation is $1 trillion. Um, SpaceX's valuation, the last private valuation was $350 billion. So lots of value coming in there. Anthropic at $380 billion, the makers of Claude.
Yeah.
So lots going on there. And the question I kept looking at was, well, is it worth jumping in if you're gonna get this opportunity all of a sudden to buy OpenAI shares or buy SpaceX shares? Should you go buy those on day one, or is that risky, right? That
Yeah.
was the question I wanted to ask. So, Nick, what's your thoughts on that? What kind of research were you able to pull up on whether that's valuable or not valuable at all?
Yeah,
To
yeah. Well, it kind of depends, if you're able to participate in the IPO and actually get allocated shares, then it can be pretty advantageous because usually these names, especially the ones with a lot of hype behind them, like SpaceX, I think is probably the most imminent one just based off of the paperwork that we're seeing. And they're going to be a large one for sure. I know you mentioned that valuation of 350 billion, but I think since that valuation, XAI was merged together with SpaceX, so it's kind of a package deal there. And I think they're looking for about $2 trillion, which would put them in the top 10 U.S. market cap. So that would be a really notable one. But I think going back to the question of do we want to participate day one, if you can get allocated shares, which is very difficult as an individual investor to get allocated shares to these, very popular IPOs, things like SpaceX. If you can get allocated shares in that way, then it can definitely be worthwhile. The problem is most people like us, even a firm like us, an RIA, where we've got a decent amount of assets, we don't have the best access to those IPO markets. It usually goes to pension funds, other funds first before it's offered to our clients. And oftentimes, if we have a client coming to us looking to participate in an IPO, we tell them, we can talk to them about potentially subscribing and seeing if we can get allocated any shares, but actually, um, you know, in our experience, especially if it's a popular one, we haven't been able to get uh, participation in that. And I think that's the case for most common investors for anything that's popular. But typically, you see the share price rise, especially with these popular ones. They take off on day one. I think one of the best examples is Airbnb from a while ago, where they just absolutely skyrocketed that first day. And then, you're kind of stuck if you weren't able to subscribe or, get the shares in the initial IPO. You're stuck going to the secondary market where you're going to be paying well above the price that people who participated in the IPO are able to get. So there's a lot of risk with that. And then on top of that, uh, usually there's a lockup period for the people that held it before that expires about 90 days or a little bit more after that. And you got a lot of people who've had their capital locked up for a while looking to get out. And that can be a dangerous place to be if you bought in on day one.
Yeah, exactly. And just to clarify for those that aren't familiar with IPOs, when you're talking about that we're talking about being offered shares at the offering price, right? Which is
Yep.
really pre-market trading on day one. Um, and that, like you said, is a very different distinction than the the price after shares start
Yeah.
trading in the first couple minutes of whenever they, in the first couple minutes of their trading, right?
Yep.
Most investors that are getting access to the offering price are institutional clients. And if you think about it, what's happening, the underwriters are intentionally um, underpricing in a lot of cases the actual share price to reward their institutional clients and ensure basically a successful debut of the actual stock on the markets. So they kind of want that, the underwriters actually want that pop on day one, which is very common. In fact, I think the first day pop on average is 18%.
Yeah.
So, very good day for that. And underwriters are, they're doing that on purpose, right? They're purposefully underpricing the actual offering price in a lot of different cases. Yeah, basically to reward those institutional clients who are holding it and holding on that first day. But if you're going and buying SpaceX or buying OpenAI in the open market on day one, once it starts trading, you're already on average paying 18% plus over what the actual offering price is, which is a totally different scenario.
Absolutely. Yep. And the longer term track record on IPOs just in general is not great. And largely because you've got that initial spike and then they tend to kind of fizzle out. And sometimes there's a lot of hype behind these IPOs and maybe they're not the best company underneath. I don't think that's the case with a lot of those names that we're talking about, with this go round, in particular with these large companies. But longer term, the track record on these IPOs is not necessarily the greatest.
Yeah, yeah, exactly. There was a study done on between 91 and 2018, and actually DFA did this portfolio study. It was a hypothetical portfolio of recent IPOs and did a study between those years, 91 and 2018, and found that the hypothetical portfolio of recent IPOs returned 7% annualized versus 9% for the Russell 3000.
Yep.
So actually, in that scenario, we're talking about an aggregate, a portfolio of IPOs underperforms just the broad market on a longer term basis like that. Obviously, there are certain names that, perform phenomenally. Like you mentioned Airbnb already. Snowflake popped over 100% on day one. DoorDash was positive more than 80% in day one. So there are names that make the difference there. But in a lot of cases, that day one is followed by a intense pressure to sell on the following day. Or like you mentioned, Nick, and this is really important, the lockup periods are for the insiders holding the shares are sometimes 3 to 6 months after that period, or after the going public period. So you've got this pressure potentially 6 months, somewhere between 3 and 12 months after, where their lockup periods are over, and all of a sudden there's this pressure to sell from insiders, which again pushes the price down. So it's kind of a dangerous game to play if you're not getting shares at the offering price.
Absolutely. Absolutely.
Mhm. And even some really high quality names of today, like Facebook. This is a good example I found. I didn't know this actually, but do you happen to know where SpaceX or Facebook traded, what their from their IPO offering price, where they draw down to the first couple months of trading? Actually, I think it was 4 months down.
Yeah, I don't know the exact number, but I do know what you're talking about. Yeah, Facebook did not have a very successful um, beginning trading period after their IPO. I do know that. Wasn't it? I don't know. Like I'm gonna say 20%.
Yeah, it was actually more than that. They actually lost 50% in the first 4 months following they IPO'd in 2012. And obviously they rebounded since then. And that's another important part here is just because the IPO isn't successful, right? Whether it goes up or down on day one or up or down during the first 6 to 12 months, it doesn't mean that it's going to be or not going to be successful after that. I mean, Facebook is one of the great companies in the world in terms of its performance since 2012. But the first 4 months they're down 50%. They're up 1,400% from that point. So
Yeah.
that does not mean it's really not. And from my perspective, it's just not indicative of success. Whether you have a great first day or first couple of days or first year of trading in an IPO or a very poor one, it really doesn't matter. At the end of the day, it doesn't define the company's success going forward. It's just, and it's, again, it's one of those things that's very hard to trade. So usually when we get asked those questions, I mean, again, it's hard to get too excited about those when you know the data, and just want to make sure that you're educated about whether you should be participating and buying those shares, especially when you're not getting them at the offering price, which again, most people are not getting those shares at the offering price.
Absolutely. And I think that's, that's the bigger thing, because you don't get to experience the initial pop, which is really where most of the return comes from in that beginning time period, at least for most of the companies that I was looking at. Um, that's really the big thing. And for the most part, we're not able to participate in those just because, like you said, larger institutional buyers are getting allocated those shares. And by the time that it makes it to the more common investor, it's very unlikely that you're going to get allocated any shares, even for something that's not as highly desirable or popular like SpaceX. We've had people ask to participate in IPOs for insurance companies before. Ones I wasn't even aware that they were going to IPO, just kind of smaller companies, and still had issues. We weren't able to directly participate, and that's just kind of the unfortunate reality of the matter.
Yeah. Yeah, exactly. And you were mentioning that there's a wide range of different types of companies that are IPOing every year. In fact, I think I have something in my notes here about the number of IPOs in 2025. It was very, very high. Yeah, 2026 has 371 companies going. Okay, hold on a second. Let me read this. 2025, 371 companies went public in 2025, which was up from 266 in 2024, right? So the point is there are a lot of companies going public, and there's an extremely wide range of different types of companies and a really extreme range of success. Uh, there are, like you mentioned, Nick, some very high quality names that have great success in their IPOs and can return, massively right away. But that's really the top, 5 to 10%, not the majority. The majority, the average is much more lackluster.
Absolutely. And I pulled up a few charts of performance of relatively famous IPOs. Like I remember when Uber IPO'd, I think I was in college, and I remember my dad talking about it and potentially wanting to buy some shares of Uber when it came out. Airbnb, another big one, and then Rivian, because we like Rivian here. That's another interesting story. But Uber since IPO, this is 1 year after the IPO. So if you participated on day one, a year later, you're down. Now, I don't know that this includes the initial pop that it had, but 1 year after, down 21%. So not a great look there. And then on top of that, you kind of tell when insiders are starting to be able to get out in that one. Similar story with Airbnb. Airbnb, a better story, up 167% a year after their IPO. But the majority of that coming for those people who were able to participate in the initial subscribing to that IPO. Almost 100% coming from that first day, and then from there, trading up and down from there, and you can see when insiders were able to get out, that sort of thing. But if you weren't able to participate in that initial day, then you missed out on a good amount of that performance.
Yeah, yeah, exactly.
And then just because, I mean, we like Rivian here, we've talked about that. It's an interesting company. We're car guys. But another interesting one to look at since their IPO, that was a really popular one as well when it first came out. I remember people were very excited for Rivian, and haven't made it back to that initial IPO price yet.
Yeah. But it's, you know, from my perspective, again, the takeaway is really the odds of getting shares at the offering price are essentially zero for any retail investor. Unless you're a huge institutional investor, you're not getting shares at the offering price. You're buying after the pop. And the best thing to do is probably just wait and see. Maybe a few earnings cycles go by, the lockups, go away and pass. Insiders actually get to get their liquidity, because and it doesn't mean like an insider is selling that they don't have faith in the company anymore. Remember,
Yeah,
some of these insiders have their entire or the majority of their net worth locked up in these companies. They're just looking for liquidity. That's one of the
yeah,
reasons in a lot of cases they're going public, right? And that the after those things kind of settle, that buying on some type of meaningful pullback, if assumedly the fundamentals are still held, then that's really probably the place to go try to look at those IPOs and actually buy them as a retail investor versus trying to get, some moonshot from the first, get lucky on the first day. That's not really happening. That's really for the institutional investors that are priced into the IPO at the offering price, and for the owners of the company, right? As the
yeah,
shares get priced. And I don't necessarily look at that as well as like an unethical thing. I
yeah,
I look at that as, again, a lot of this is unknown. Think about an insider that is, holding these company shares and they're now offering them to the public. I mean, they've had this private company that's never been traded before, that nobody, is not something that, that they've been opening up to the public, and all of a sudden they're opening up all these financials, all their business to the public and selling shares to the public. It makes sense that the share price is just unknown. You
yeah,
can't know it. You can't know the excitement around that particular name. You don't know how people are going to react to it. It's a kind of a natural thing, but it is a little bit dangerous as a retail investor to try to profit on that. It's just one of those things that's pretty scary if you're just because the downside is pretty significant. The chance that you buy at a really high price is I guess an outsized one.
yeah, yeah. Well, when you've got a lot of excitement building in a particular marketplace, there's a high potential for distortion there, just as people kind of pile in, fear of missing out. That's a well-known trend. It's easy for things to get a little bit overbought as people get excited, and then at some point there comes a correction when some of that hype dies down. So,
Yeah,
not very surprising. Well,
yeah.
what about we've talked about people trying to get into a stock after its IPO, but what about the people who can get in before? If you go private equity route, what do you think about that?
Yeah. I mean, that's where I think there's a lot of potential there for people that can get. I mean, those are similar to the actual insiders and founders of the company, right? They're
Yep.
buying they're buying at so they should be buying at a significant discount for lack of liquidity, right? And then they
Yep.
have their opportunity to liquidate in the public markets after their lockup period. Um, or maybe not if they don't, if they're, in certain cases, if they're getting in before, and in private equity, they don't have lockup periods. But I mean, yeah, that's a very sensible way. I mean, that's a totally different scenario than, again, buying as a retail investor on the first day of trading.
For
What do
sure.
you
And
think
there's a
about
lot
that?
of risk with that as well. Not all of the private companies that you can get access to through any variety of tools these days are like a SpaceX that's, a pretty well established company. There's a lot of smaller companies, less proven companies out there, and it is a more dangerous space. I mean, they don't have the same reporting requirements that public companies do. So, again, like you said, it makes sense that the returns on at least those successful names are very high for the investors that got in early, just because you are taking a lot of risk.
Yeah, absolutely. Certainly taking a lot of risk, but you should get rewarded for risk, right?
Yep.
So getting those shares at a cheaper price, where you have to deal with some illiquidity for some period of time, unknowns of how the market's going to perceive this company. That's why you get rewarded for those type of investments.
Yeah. Definitely. Definitely. Yeah. Well,
Anyways, well, good topic of conversation and
yeah,
relevant.
I've
Yeah,
got one other thing I want to talk about really quick because it's related. What do you think about SPACs?
SPACs.
Yeah.
Uh, I'm skeptical of them. A little
Yeah.
nervous. A
Yeah.
little nervous when I see them. What do you think?
I'm with you. I mean, it's one of those products that's it's kind of scary because you don't really know what you're getting. Again, with these SPACs, it's basically writing a check to someone to go buy a business that you don't know what the business is. Sometimes you know what industry it's in, but you don't know the actual company they're going to buy.
Yeah,
And it's kind of another way of bringing a company public as opposed to doing an IPO. Um, and yeah, I agree with you. And it's kind of funny that they were very popular before the financial crisis, and then they kind of had a resurgence in 2022, and then they die out again, and they kind of have these periods where they come and go in popularity. Um, yeah, I don't know. I just thought that was interesting, a related topic because we're talking about IPOs here. Alternative being SPACs, another way of taking companies public. Um,
yeah,
we hear about those from time to time. Sometimes people ask us about investing in SPACs, and it's an interesting world.
yeah, definitely. And for those that aren't familiar, SPACs, SPAC, Special Purpose Acquisition Company. I think you got that acronym right.
You got it.
Um, that yeah, that basically you're getting a company is raising cash, but they don't actually have any cash flows yet or any underlying business. They're taking the cash from their investors to go purchase something that hopefully has value. Um, so I would just describe it as very risky. There's obviously some potential there, right? But it's a it's akin to a private equity fund in a lot of ways,
Yeah,
actually,
yeah,
just done more publicly. So, which again, I think the miscommunication on that in a lot of cases is just retail investors not understanding exactly what they're getting into. Um,
yes,
just because it's something that is more like a private market vehicle, but is offered to a of the public market and less sophisticated retail investors that don't really know what they're getting into. So that's the where the skepticism comes from my perspective.
yeah, for sure. I definitely agree with that. And then the other thing with SPACs too is you're kind of mixing two products that don't necessarily go together. You're trading private company, you're trying to take it public, but you're trading a private company, and with this public vehicle that you're using, there's a lot of specific restrictions that come into play, and usually it's the time restriction, where they have to purchase a company within 18 to 24 months is the typical window. That can kind of be a difficult time frame to reach, and it's kind of interesting when you look at actually how many of these SPACs end up acquiring a company and going public with it. Not the highest success rate there.
Yeah.
So the chances of you putting money into a fund and that money never ending up getting deployed and purchasing another company, it seems to be uh, pretty frequent. So um, another kind of a risky game to play, but comes up with IPOs.
Yeah, definitely. Definitely a good thing to come to cover.
All right. Well, I mean, that does it for me on IPOs, SPACs, you
Sounds
name
good.
it.
Yeah, me too. Well, trivia time. I have one good question for you. That was all I was able to come up with this week.
I've got one for you too.
Good. Why don't you go ahead?
All right. Perfect. Let's see here. Which tech company famously went public in 2004 using a Dutch auction instead of a traditional underwriting process?
Wait, you say which tech company in
Tech,
2004?
yep. Tech company in 2004.
Um, 2004. It's not Facebook. They were 2012.
Yep.
I'm wanting to say Apple.
No, not Apple.
It was
Not
Apple in
Apple.
the 90s.
Yeah, they were
Yeah.
a bit earlier. Yep. They're
What is
big.
it?
They're big though. They're big.
They're big, and
I,
they're a
I can
tech
tell you
company.
if you want. I can
Yeah,
tell you if you want.
go
It's
go for
Google.
it.
Google.
Is it Google? Okay,
Yep.
that's a good question. Interesting.
Yeah, that was an interesting read.
Huh. Google.
Yeah. So they still IPO, they just had a different pricing method. So
Yeah, that makes sense.
yeah.
Neat. All right. Good question.
Thanks. Yeah. I like that one.
All right, I got one for you as well.
All right.
We already covered the average first day pot for IPOs is
Okay.
about 18%. So if you go back and look from 1980 to today, what year had the highest average IPO return? I'll give you a hint. It was 60% on their first day of trading. That's the IPOs averaging 60% on the first day of trading.
I'm guessing
Um,
right before the dot-com bubble or before the great financial crisis. I don't know. Let's say 99.
oh, that's real close. 2000. I'll give it to you.
2000.
That's
Oh
you
man.
you were right on. Yeah. Rick, that was 2000, the peak of the dot-com bubble. Dot-com bubble. So IPOs averaged 60% on the first day of
That makes
trading.
sense. That's a wild figure though.
Yeah, exactly. Well, and most of the, oh, not most of that. A lot of them were bankrupt, in the next 24 months,
Yeah,
which
yeah,
highlights the risk.
that's the danger. Yeah.
Yeah,
That
absolutely.
is the danger. Well,
Alrighty. I think that's it for me. You got
yeah, I think that
any
wraps
other
it up.
closing thoughts?
Nope, nothing else from me.
Sounds good. Well, we'll wrap it up then. We'll be back next week. Same time, same place.
All right, thanks everyone.
Thanks, everybody.
Bye.